Welcome back, ladies and gentlemen. This is the Bearable Bull here. And I got this aggressively average content for you today. As here we go. Yet again, David Schwartz puts out another tweet that'll make your head spin. Tweeting out a $589,000 check at a Warriors game. Something that'll get the Riddlers nice and hype. Ladies and gentlemen, this is all theater to me. But at the end of the day, with this case wrapping up and these banking developments happening at the exact same time, I don't believe in coincidences anymore. I believe that some fireworks display of a moment for the crypto market, some positive price action for XRP is coming soon. And just next week, I'm going to have another interview with Waters Above Crypto to help all of us detail the future price targets for our favorite digital asset, as well as where the rest of the market is going to go. He's been spot on so far, and let's see how much more we get right here on this channel and moving forward in this market. Now guys, that being said, Caitlyn Long, one of my favorite women in the crypto space, put out a powerful clip of her talking about banks regulating crypto, and specifically banking regulators trying to crush innovating banks and chokehold the crypto market. I think this is going to give you all a better perspective as to the monster we're dealing with. And we're going to get into a lot of things, as a lot of theater and a lot of synchronicity amongst the banking system is happening right now.
So here's the punchline. The systems have not been updated, and that scares the bank regulators. So what did they systematically do? They went out and proverbially shot the most tech-forward banks. Now, stop and think about that. People are voting with their feet to use better, faster, cheaper ways of moving money. And what did the bank regulators just do? Shut down some of the most tech-forward banks in the country who can move money better, faster, and cheaper. That should scare every American, because and you saw it in the White House. By the way, this has been all coordinated. The White House report that came out the day before was dunking on financial innovation and talking about how we should basically just stick with our banks, which are safe and sound. That was a hilarious observation, because of course we all know the banks are not safe and sound. It's now very clear that there is a solvency hole. By the way, there always has been. It's just that now everybody's realizing it. So the next point is that when the White House is out there saying, basically taking an anti-innovation stance, and you see what the bank regulators have done to shut down some of the most tech-forward banks, they want to retrograde technology back to the analog world.
And ladies and gentlemen, she made a couple of noteworthy points. They're trying to shoot the baby in the crib. Crypto is still in its infancy. They're trying to analog innovation. And the banking sector has always been insolvent. 5 bank failures happened in the last month. Silvergate, Silicon Valley, Signature Bank, First Republic, Credit Suisse. Now Deutsche Bank is wobbling. And I have a friend in high-level banking telling me rumors that Wells Fargo is experiencing problems. Oh, ladies and gentlemen, this is going to be a fireworks display of a moment. The Fed is saying they're going to backstop any bank failures. They're going to make sure that the FDIC is covered. And this is one of those things that I have to laugh at. Ha ha ha! They said crypto is risky, when in reality, fiat and putting your money into the bank was always the riskiest play. Not only that, but like clockwork, Jim Cramer called this specific company right again.
Well, the real problem with Credit Suisse, which is the analog, is they never made any money. Deutsche Bank is actually very profitable. So let's start there. Why bail out a bank that is just a chronic loser versus a bank that's doing well?
Derp-a-der, my name is Jim Cramer and I call it right again. Derp-a-der, Deutsche Bank just collapsed. Like clockwork, the inverse Cramer strikes again. Not only that, guys, but Finance a Lot states the Fed started repo operations this week. And this is the final warning before a crash. It's a self-fulfilling prophecy. This confirms interbank lending has stopped and we're on the verge of a crash. The feds know this. The banks know this. And now all of you know this as well. Now, ladies and gentlemen, we're going to touch on something I discussed earlier this week with the news about Trump going mainstream. This is happening as the massive banking inflation crisis is occurring, and I believe Glenn Beck made a powerful point in this clip to let all of you know exactly what this game plan is. I want all of you to pay attention and listen up.
Why are they going after Donald Trump now? Well, there's lots of reasons, but I would like to start with the granddaddy of them all, distraction from the banking crisis. The banking crisis, inflation. By the way, the Fed that told us inflation is just transitory. If they raise the interest rate today, the banks were worried that, we might have a whole bunch of banks go down. Well, they did raise it. You know why? Because they're terrified of the inflation that is coming. They couldn't not raise the rates today because of inflation. What does that tell you? This gives you flashbacks to 2008. You should read on because the next chapter is much worse than 2008. The banking crisis spreading to Europe. Credit Suisse has been in operation for 166 years. Switzerland's largest bank, UBS, had to do a hasty deal at the very last minute to buy them out, quick, before the markets open. The deal was so last minute and rushed, the New York Times reported, quote, so hastily assembled was the deal that UBS told analysts that they didn't have the time to fully model all of the financial impacts of buying Credit Suisse. Okay. Credit Suisse has had its problems, but Deutsche Bank has been on the edge too. What's going to happen with them? How many banks here are facing this same scenario? This rate going up 0.25 today, is that going to put any of our other banks in line? And by the way, if we bail out all the banks, isn't that nationalizing our banks?
Ding, 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 ding. And that right there, ladies and gentlemen, is what it's all about. Nationalizing everything. Talk about one thing. Distract people about another thing that's going on. And then take over the entire planet. And something else that all of you need to have in your minds is this powerful quote by Jungle Inc. as we redirect you back to the crypto market for just a second. Jungle Inc. stated, if you're a crypto exchange and you're not going to get sued by the SEC and given the chance to reach a settlement agreement like Kraken, like Coinbase, and like Nexo, it might actually mean you weren't invited to continue. Bizarre, but the SEC knocking on your door right now as a crypto exchange might be a good thing. That's an interesting take, but I believe it's one that I'm going to call the success tax. You're going to be allowed to operate, but pay this a little fine and you're good to go. But if you don't get sued and you're a crypto exchange, you may have to go overseas. Keep that in mind, as I'm going to be very observant of what keeps happening on the legal front in this market. In addition, something interesting that you all need to be made aware of is the Bank of America and JP Morgan rivalry. As we know, Bank of America is a strong Ripple partner, as Ethereum has JP Morgan's backing. Bank of America stated it expects Ethereum adoption and usage to decelerate if the blockchain is not able to increase its throughput. Something very interesting to note, and something else going on in the digital asset world, is that as the attack on crypto is happening in real time, I believe it's to allow the traditional finance incumbents to come in and take over. In the midst of the turmoil, Fidelity launched the ability to buy Bitcoin and Ether BlackRock, Bank of New York Mellon, and now NASDAQ are launching crypto services. If you think this industry is going away, just look at what the big players are doing, not what they're saying. In addition, guys, even Ryan Selkis, someone they used to hate Ripple and XRP, stated Ripple should win the overreaching SEC case and the XRP ledger should compete fairly on digital asset payments infrastructure globally, as he's beginning to see how important this case is for the general health of the industry. And with that being said, guys, a big question all of us in the XRP community have is, will Gary Gensler, will he end up suing Ethereum? Will he claim Ether's a security like many of us believe it is? Will he go after the free pass narrative and the anonymous accounts? It's very interesting, but when Joe Lubin was asked directly, this was his response.
Ethereum, I want to focus on Ether for a moment, because there was this lawsuit brought by the New York Attorney General against KuCoin. Within that, the New York AG suggested that if Ether could be a security. As part of that, they say that the shift of proof to stake has incentivized users to own ETH due to the pooling method and the nature of the way the Ethereum blockchain works. What's your view on that? Do you think it's a security?
So anybody can say anything. It doesn't make it true. It's unfortunate that that sort of sideswipe was made, but I don't think it's all that relevant.
But people are trading it and staking it with the expectation of profit. That is one of the determinants of what is a security. Sure. So is that not concerning?
People buy barrels of oil with the expectation of profit.
Good point. So you're confident at this point that Ether is not a security? What if it is?
Definitely not.
What's the implications?
What if it is a security?
What are the implications?
I don't think there's any point to speculate on something that is extremely unlikely.
Now, I don't know about all of you, but right now Mr. Lubin is looking slightly less confident than he did in those moments before that ETH free pass. Isn't that interesting? Jay stated something very interesting as well. It looks like Joe Lubin may have some sort of dirt on somebody. But like Santiago Velez stated, so that everyone understands what we're dealing with here, Gary Gensler, Joseph Lubin, and Mike Novogratz all worked for Goldman Sachs together at the exact same time. Mike Novogratz was Joe Lubin's roommate and worked under Gary Gensler in Hong Kong. Then, Gensler worked again with Joe Lubin when he was at MIT and even hired Novogratz as a guest lecturer. Oh, this legendary bald-headed trio goes very, very far with Ethereum, don't they? The question to me is, will Gary, with his little weasel ass, betray his friends, at least former friends at Goldman? And will he do the unthinkable and have Ethereum sued for the potential of it being called a security? In my personal opinion, I want it to happen because I want to buy up some cheap Ether. But at the same time, let's see what happens as the corruption runs deep with Ether, the second largest digital asset on the planet, as XRP in their case decision is coming to a rapid conclusion. Judge Torres is on standby. The XRP army is patiently waiting. The banking system is rapidly failing. And the on-demand liquidity solution that the world needs is ready. We've been waiting a long time. And our wait is finally coming to an end. Now guys, to cap off this video for today, I'm going to give you a humorous conclusion with a powerful clip that easily describes to all of you how the banking system works. I hope you enjoy it. As always, guys, I appreciate every single one of you. Now I'll be back tomorrow with another video.
Thanks for your time.
Very good to be with you, Brian, and good evening.
Now, you're a market economist.
Yes, well, most economists are market economists, Brian, to a degree these days, yes.
How do you think things are going at the moment?
Well, there's a great deal of international concern. I mean, we're taking a toweling, but things will sort themselves out, Brian. This is what a market does.
Well, can you explain to me how it all works?
How the economy works?
Well, yeah, what's the problem at the moment, for instance?
Well, what we've got at the moment is an international credit crisis.
Yes, how does that happen?
Well, I'm a bank, Brian, and I borrow money and I lend it out, and I charge more to the people I'm lending it to than I pay to the people from whom I'm borrowing it.
Well, who do you borrow money from?
Well, from, depositors, Brian. Have you got a dollar?
Well, yeah,
I
sure.
borrow your dollar and I give you, there's your bank balance.
$1.
$1.
Right, okay, and you pay interest to me on that?
I do, but I also charge you fees.
Well, why do you charge me fees?
Because, Brian, I'm looking after your money. Your money is secure with me. I'm a bank. I mean, this is a very important amount of money. This is probably your nest egg. It's safe with us.
And how much interest do you pay me?
Approximately the same as I'm charging you in fees.
Oh, good deal for me.
Well, your money's secure with us, Brian, and I then lend that money to businesses, and those businesses generate income. This is how we build an economy.
Yeah. And they put that income into the bank.
They do, of course, Brian, and that builds the savings pool, and we can invest more money.
Well, who do you lend that to?
Well, to people who need credit, Brian. You see, money creates more money, so if we can create money that creates more money, we're broadening the economy, we're expanding it all the time. Yes.
But shouldn't people just buy the can afford?
You don't need to afford the things you're buying, Brian. You need to afford the interest on the money you need to borrow in order to buy them.
And you're charging higher rates for all this?
We do hop into them a wee bit on the credit rate, Brian. We stick the hydraulics under that because it's a slightly higher risk strategy.
Do people need to be buying these things that they can't afford?
Obviously they think so, Brian. I mean, these things are advertised to people as very necessary, very important and deeply, deeply attractive.
Well, who's advertising things that people don't need?
The companies we're lending the money to.
So, OK, then you bought into the US subprime housing market.
Well, Brian, concerned are we to build a better Australia.
You helped build a worse America.
Yeah, well, that was an accident, Brian. What we were doing was investing in the international investment market.
And that's been a disaster.
It, frankly, famously, hasn't been a huge success hitherto.
Well, so what are you going to do?
Well, now you give me $700 billion immediately.
Why?
Well, because we need it, Brian. I mean, the system needs money. Imagine the economy as a body. It needs blood pumping around it, Brian.
And you haven't got any?
We haven't got any money, no.
Well, why not?
Well, we lost ours. I've just been explaining that.
Well, you're not having mine.
Mum! Brian won't let me play with his stuff.
That's the only money I've got.
You're in for it.
Why do I hold XRP? Because Ripple's the chosen one to lead the new global digital payment system, and they use XRP. In 2013, the Federal Reserve began looking for faster payments options. 2 years later, an action plan was born and a federal payments task force was created. It included one company focused on crypto, Ripple. In 2014, the World Bank and Better Than Cash Alliance, which includes the Bill and Melinda Gates Foundation, Clinton Global Initiative, and the governments of 32 countries, put out a report called The Opportunities of Digitizing Payments. 1 year later, the Better Than Cash Alliance featured one crypto company on their website, Ripple. Today, Better Than Cash Alliance and all other UN initiatives are focused on a single agenda, the Sustainable Development Goals for 2030. You can see the SDGs logo on Bill Gates' lapel, world-leading companies, the Better Than Cash Alliance website, and on the UN's official exchange, Exchange. What crypto is Exchange officially utilizing for their carbon credit solution? XRP. The world will move to a new international standard for exchanging electronic messages between financial institutions by 2025 called ISO 20022. Who was the first ISO 20022 member focused on distributed ledger technology? Ripple. Who's partnered with over 300 financial institutions, including Bank of America, American Express, PNC, Santander, SBI, HSBC, Standard Chartered Bank, Bank of England, India, Singapore, Scotland, Australia, and Indonesia, the largest banks in Japan, Canada, Egypt, the Middle East, United Arab Emirates, Thailand, Morocco, Bhutan, South Korea, Brazil, and Latin America? Ripple. Who is a former employee overseeing the Federal Reserve? Ripple. A former employee overseeing the world's largest asset manager, BlackRock's digital asset division? Ripple. Leading Australia's CBDC effort? Ripple. Who hired a former Treasury of the United States? Ripple. 2 former Federal Reserve attorneys to their board? Ripple. 2 former Clinton and Obama advisors? Former Minister of Defense and Economics of Germany? Former business director at Swift? Former Swift board member? Former CFO of PayPal? Former head of the DTCC? Former chief business officer at Uber? Former VP of Amazon and former SEC chair on their legal team? Ripple. Who's a member of the Digital Pound Foundation, Digital Dollar Project, Digital Euro Association, Mojaloop, IMF's high-level advisory board on fintech, Hyperledger Blockchain Consortium, Open Payments Coalition, Faster Payments Council, Global Payments Steering Group, Cross-Border Working Group, International Association for Trusted Blockchain Applications, Crypto Climate Accord, University Blockchain Initiative, World Wide Web Consortium, and a featured partner of the World Economic Forum with 3 members of their team directly listed on the WF website? Ripple. Now, does Ripple and XRP sound like they're going to disappear, or do they sound like they're part of a much bigger plan? You decide.